What's up everyone? Welcome back to another episode of Crypto, Coffee and Lo-Fi. It's been a little bit since I've uploaded one of these episodes, but now that I have a clear read on the market and the market's starting to heat back up again, seeing a lot of opportunities, I thought let's start the series back up. Before we get started, a special thanks to Bybit. If you want to support the series, you want to support the content that I upload, click the link in the description below and sign up with them. Alright, let's get stuck into it. Just wanted to cover some of the easy and easy out strategy basics. If you want to dive a little bit deeper, you can join our free Discord. We have a bunch of strategy documents and I trade this strategy live with everyone in the Discord every single day. So what is the easy and easy out strategy? Essentially, it just is one pattern that helps us identify accumulation or distribution in the market. Now, it doesn't matter who is accumulating or distributing whatever the asset is that we're trading. It could be market makers, it could be funds, it could be smaller traders, larger traders. Regardless, it doesn't even matter at all. What this strategy does is it allows us to pick up on if price is accumulating or distributing, and then we piggyback that larger order flow. Okay, so the first step is to identify the pattern. So I have a few examples here on the chart. This is distribution. Okay, so the pattern, simply put, is you wait for a high to form at resistance, preferably. Once the high forms, we wait for that high to be swept. Once the high is swept, we wait for a break in structure. So the break in structure has to be below the low that was responsible for taking the high. So you can see this swing low is responsible for taking that high. So we sweep it, we then break and close below here. We then return to the range between this low and this high, and we form the same pattern. So we have a sweep here, another break in structure, and here would be your trigger. Once you do get the close below the second break in structure, then that tells us that price is starting to distribute. And then the same thing goes for accumulation. So preferably at support. So we have price leading into support, and we form a low here. We then come up, we then break below the low and break above the high that was responsible for taking that low. Then we return to the range between this high and this low here. Once we return, we then form the same pattern again, and that would be your trigger or the confirmation that price is starting to accumulate. So first step is to identify the pattern. The second step is to ensure that we're trading the pattern at the correct place. If we follow the simple rule, do not buy into resistance and do not sell into support. If we're leading into resistance and we're getting accumulation, that is not the time to be trading this pattern. But if we're getting into resistance and we see distribution, that's the time to be trading the pattern. And same with accumulation. So if we're leading into support and we start to see distribution, that's not the time to be trading the pattern. If we're going into support and we see accumulation, something like this, then that's the time to be taking the pattern. Okay, the next step is to look for objectives. Okay, so let's say we're leading into support here, we see the accumulation, and then just above the accumulation, let's say right here, we have a bunch of equal highs. That would tell us that liquidity is resting above those equal highs, and if price is accumulating, then that would be the next obvious objective for price to reach towards. So that is just a basic look at what the easy and easy out strategy is. Like I said at the start, if you want to learn more, we have a free Discord and I have heaps of strategy documents that you can look at. So let's start off looking at BTC. Let's go all the way to the weekly and break this down. Okay, so one of the most basic and beginner rules that you will learn when you first get into trading is do not buy into resistance and do not sell into support. Right now we're reaching into resistance. So we have support, we break through it here, and now we're just retesting it. So now is not the time to be looking for longs. I do think that over the next week or two, we will see a bit of a retrace. Now, it's a little bit too early to assume that this retrace is going to lead to the end of a bull market. We are still in a bull trend, but we are leading into resistance. So the next most likely outcome is that we retrace. Where will we retrace to? If we're in a bull market, what we need to do is mark out the previous areas of accumulation. So here, we have a sweep of all these lows. Right here, we break up above the high that took those lows. So this is the beginning stages of accumulation. We then retest the range between this high and this low, and we get some more accumulation here. Let's go down onto the daily and say that this is actually the best high to use. So yes, we're leading into resistance, but we are still in a bull trend. So marking out the previous areas of accumulation like I'm doing right here, waiting for price to retest those areas, and then waiting to see if we get some more accumulation. So if we reach down into this area and we get some more accumulation here, then looking to get long again. Even if we invalidate this whole accumulation here and we get a close below, we still have this accumulation. So if we reach down into here and get accumulation like that, then you can get back into swing longs. So the strategy here is really quite simple. We are in a bull trend. We do have some clear accumulation, but we are headed into resistance, and we are seeing some distribution on the lower time frames here. You can see we have a sweep and we got a break in structure. So even though we are heading into resistance and we are seeing some distribution, we still have all of the accumulation here that we need to retest. So marking out these levels, once we reach into there, if we get accumulation here or here, then that would be the time to look for longs. if we do get a weekly close below this level, let's say we get the weekly close, we come up and then we start to see distribution, let's say on the daily time frame, then maybe I could say, yes, the bull market is over. But until we start to see that, we should just assume that any retrace is just going to be followed up by some more accumulation. So we have the levels that we're looking at. Really quite a simple game plan. On the lower time frames though, if you jump out onto the H4, we got a break-in structure or bearish break-in structure on the lower time frames there over the weekend. So now going into the new week here, if we can get some more distribution, let's say during London or New York today or tomorrow, so some more distribution, a sweep followed by a break-in structure, then you can look for some shorts. The first target would be below these equal lows. The second target, this high here, the high is responsible for taking those lows. Once we reach into there, if we don't get any accumulation, then looking to hold that short all the way down into this low here. So really simple stuff. We are bullish on the weekly and monthly. The daily looks like it's starting to turn. We still have all of this accumulation that we need to test. So waiting till we reach into the accumulation. If we reaccumulate, looking to get back into swing longs. If we don't, then looking for a potential downtrend to start, but I doubt it. Alright, so now taking a look at Ethereum, and it's pretty much the exact same story as Bitcoin. So we mark out this area, so we have resistance, support, and then we break below. So this area is now resistance. So very basic concept. You should not buy into resistance, you should buy at support. However, I'm not saying that we are not in an uptrend here. I'm saying that the most likely scenario we're going to see next is a small pullback. So if I think that we are going to see a pullback, if we're in an uptrend, the next thing that I should do is then mark out the previous areas of accumulation, because if we are in a bull trend, we should assume that the previous areas of accumulation should hold. We have a sweep here, a break here, right here. Then we return to the range between this high and this low, and we get another sweep and another break. We then go down onto the daily. We then took out all of these lows in here. So liquidity resting inside of the accumulation, we then take it all out. So we swept out all those lows, and then we broke up above right here. Okay, then we have some untested accumulation in here that I think that we are going to retest next. So we're sitting at resistance and we're starting to get some distribution. So we took out that high there, we then get a break in structure, we then move down, we take out all of these highs, but we do still have some accumulation. So the next thing that I think we're going to do is run out these equal lows. Once we do run out those equal lows, if we get some accumulation below them, so something like this, accumulation here, then that would be a good time to get long. If that fails though, and this leg starts to fail, then looking further inside here for longs. Okay, so really simple setup here. We're leading into resistance, so now is not the time to buy. We have some distribution here, just like we do on BTC. So on the lower time frames, let's say on the H4 and H1, shorts are definitely favored here. Looking at these equal lows as the first target. Once we reach below there, if we get some accumulation inside of this leg between this low and this high, then that would be a good time to get long. If we don't get accumulation there, then looking for accumulation below this low at this accumulation zone right here. So really simple. That's ETH. With all of the developments happening with BlackRock and the new ETFs and everything like that, I think especially with COINBASE most likely being the custodian for the BlackRock ETF, if it does all get approved and everything does go through, I think using coin and MicroStrategy as kind of leading indicators of what is going to happen, if the bull market is going to continue up, if we're going to see a retrace, once the retrace is over, if the bull leg is going to continue up, I think looking at coin and MicroStrategy is kind of a smart play. So right now looking at coin, we are leading into resistance here, so it's probably not the best time to be buying. However, if you look at all of these lows, we have some pretty clean accumulations. So we have a sweep of all these lows right here, then breaking up above the high that was responsible for taking those lows, and then we have some more ranging in here, and then we have some more accumulation. So I think even though we are headed into resistance, if we take a look at the weekly, any retest of this range right here that's followed by accumulation on the lower time frame should be good for a long. I won't be trading this personally, but let's say we do head into support here and we get some accumulation and BTC and ETH are looking good for longs. Let's say they start to retest some of the levels that I pointed out earlier and get some reaccumulation, then we can just kind of use coin and MicroStrategy as a way to kind of cement the bias and give us a little bit more confidence in the decisions. So that's coin and MicroStrategy. All right, another coin that I do want to look at that I think looks pretty good on the higher time frames is SOL. Okay, so really simple stuff. Again here, we have a sweep of that low followed by a break of the high. So after the big leg down, I believe this was post FTX drama, we then have some accumulation. So sweeping out the low, breaking above the high, and then sweeping out all of these lows and breaking above the high. We're about to get the candle close above, or the weekly candle close above there. So any retest of this area between this high and this low that's followed by accumulation on, let's say, the daily or the H4 should be good for some longs. We also have these key highs as well that I'll be looking at. Okay, so if we jump down onto the daily, you can see it looks like that we're about to get a little bit of a retrace here. Go onto the H4 actually. So there's two scenarios. The first scenario is looking for reaccumulation around 22. If we don't get all the way down there, we also have all of these equal lows here. So if we get a move below this low, followed by some accumulation there, even if we don't retest this area, then that would still be good for longs, looking at about $39, $40. It's a really strong structure here on the weekly. Unless we come up above this weekly here and get some pretty obvious distribution, then I think over the next probably 3 to 4 weeks, longs on Sol make a lot of sense. All right, so now I want to take a quick look at Ocean. So even though Bitcoin and Ethereum are distributing and are ranging at resistance, there are still some really, really great opportunities on alts. And I think Ocean is one of those opportunities. So a really clean chart here. So we have a sweep of this low, then we have a break up above the high that was responsible for taking that low. So we ranged here for a few months. Okay, so this is a really good sign the price was actually accumulating. You have a range and then you have a sweep of the range. Okay, and then we break up above the high that took the bottom of the range. Then we return to that high and we start to see some more accumulation here, take out both of these equal lows. Then we break up above the lower time frame high right here that was responsible for taking those lows. And then what do you know, we get more accumulation here. So taking out that low and then breaking up above the high that took that low. So we have the setup here. I've already started to scale in my stop loss below this low right here. And then now what we should do is look for obvious objectives to the upside. So an obvious objective could be equal highs. It could be a key swing high. It could also be previous areas of distribution. Okay, so right here we have key swing highs. What we don't want to see, even though I'm not going to take anything off of this area, like the risk reward does not add up if I start to take anything off here. But if we do reach into this zone and we get distribution, then maybe I look at cutting the entire position altogether. So even though I'm not taking anything off here, we'll keep an eye on these equal highs to see if we get distribution there. But for now, bullish. Okay, we have this key high just here and we have this key high. So we have target 1, target 2, and this would be the first trouble area, you would call it. So if we reach into here and we get some distribution, then looking to cut the trade. If not, looking at this is target 1 and then this is target 2. Bitcoin and Ethereum both ranging at resistance. Normally what that means is that some risk will trickle down into alts, and we've seen that over the last week or two, but I think Ocean is due for a leg up, so we'll see how that goes. All right, so that concludes today's episode of Crypto, Coffee, and Lo-Fi. I'm going to try to be a little bit more consistent with these episodes now that I have a little bit more of a read on the market. If you do want to learn more about the strategy, you can click the link in the description. We have a free Discord where I give all of my strategy documents and all of my live trades away, all completely free. So click that link and join up. Enjoy the rest of your day. Bye.